Hi everyone, let's go through my low time frame scenarios, including two new scenarios and potential trading setups. Starting with the most bearish scenario on the lower time frame, where wave 5 is in over here. This is a wave 1 followed by a corrective wave 2, and then we have another 1-2 before we now expect a big move to the downside. Couple of reasons why I don't necessarily like this scenario is, first of all, that this wave 2 in yellow over here retraced to the 0.886, which is a very rare target for a wave 2 retracement. It's very high. Then we have this potential wave 1 over here in blue. It's quite difficult to count this as a leading diagonal because officially this wave 5 and then a 1, 2, 3, 4, 5 is too long, because wave 5 is longer than wave 3, which is actually not allowed. And also counting an impulse over here is not very clean as well, because wave 3 is not long enough. So not easy, but in this count this is an impulse nonetheless, a wave 1 at least. Before then a corrective 2, and then we have a 1, 2, 1, 2, 3, 4, and we're looking for 5. However, if this is a very low time frame, 1, 2, 3, 4, and then we expect a 5, this wave 4 right now is taking too much time in my opinion compared to this wave 2. Look at the length of this wave 4. Look at the length of this wave 2. It doesn't look very nice. So in my opinion, this is not really a wave 4 anymore of this wide count over here, but we can't exclude it, of course, because downside in this scenario is expected. Now the minimum target in this scenario for the downside for the blue counts over here, the blue wave 3, is the 1.618 at 25.4k. And something I also like to note is that there was no bearish CVD. So if you go to the CVD chart, and I zoom out just a little bit, you will see that over here, this high is the yellow wave 2, that one. And then we have here the blue wave 2. So this is the blue 1, blue 2, and then we expect a move to the downside. And as you can see, we make a lower high on price, but also lower highs on the CVD, which basically means there's no absorption. What you actually want to see is that this high over here, so you make a lower high on the CVD, or on the price, but a higher high on the CVD, which means that more people are buying Bitcoin over here than over here, but price is making a lower high, which means that someone is absorbing all the buy orders in a very big short, and then they want to push it to the downside. And in this scenario, there's no bearish CVD, which also is another reason why this scenario at the moment is not my preferred scenario. Then we have the bullish scenario, the other side of the same coin, where in this scenario, this is a high time frame wave 1, this is high time frame wave 2, and now we are basically in another 1-2, 1-2 setup before then a very big 3 to the upside. Now, honestly, this wave 2 over here is very short in time compared to the wave 1, so I don't really like this wave 2, to be honest. But in this scenario, if we zoom in at least to the more local time frames, well, this wave 2 over here just missed out on hitting the 0.382, which is already a rare target for a wave 2, because usually the 0.5 to the 0.786, those are the most common targets. So this is already rare, and not hitting the 0.382 is even more rare. And then we have here a wave 1 in blue and a wave 2 in blue. And this wave 2 at the moment is taking a very long time. It's already past the 1.618 fib time, taken from the low of 2 to the high of 1, which basically means that this wave 2 at the moment is 161% longer in time than this wave 1 basically. So it's taking ridiculously long. Usually it's between, let's say, the 0.382 and the 1-to-1, or even shorter at least than the 1.618. So it's taken a while. So that's also why it's not my preferred scenario at the moment. I do have a potential trading setup, but mind you, it's not preferred at the moment. That, well, in this scenario, Elliott Wave wise, if this is a 1-2, then one would expect to ladder the longs in this area. Stop loss below this wave 2, as that is a very clear invalidation, and then one would expect a big move to the upside. But also the volume is not really working with us over here, because the volume, we made higher highs. Volume, however, is making lower highs, one could say, and even volume increasing sometimes to the downside. So that's not really what you want to see in a very bullish scenario. You want to see big candles, big volume to the upside, and I will only become convinced if we reach at least these highs. And we need big candles with high volume, guys. That's what we want to see. We need big candles, high volume, like we saw over here. That's what we want. We want high volume, big candles to the upside. But so far, this scenario not looking too great. Then we have this scenario over here where wave 5 is in at this particular high, and we had an expanding flat in the W, then we have an X, and then this is a wave Y. Most common target area for a wave Y is this one over here between the 1-to-1 and the 1.236. And what is nice about this scenario, also mentioned in previous videos, also with the trading setup that we had, the swing failure pattern trading setup over here, is that we had a double bottom with this low and this low. And this trade was only valid at this moment in time if we would take the liquidity, close above, and then trading it to the downside, which on the 5-minute chart and the 15-minute chart happened perfectly. Entry right at the candle close, and then one can trade it to the upside. But in this particular scenario though, one can also potentially ladder the longs over here, stop loss somewhere below. Just keep in mind that the 1.618 is still a rare target for wave Y, but honestly, if we get this low, I think the target box over down here is going to be a more likely target than stopping price right here, because there's not much structure as well, or other confluences at this level of like 25.87. So yeah, I wouldn't really like to see price go below this wick, to be honest. So that's kind of the invalidation of the trading setup for then a move to the upside, where we have a little bit of resistance as well, which I will highlight in one of my new setups, because in this scenario we're looking for even higher. In this scenario, this 3-wave structure over here is only a wave A. We would then be looking for a 3-wave in then a B, expanded flat preferably, to take out this double top for liquidity before then an impulsive move to the downside in a wave C. Then I'd like to show you this scenario, which is invalid, and well, I'll explain you why first. So first, let's talk about the scenario, because I've seen it online as well, where this is a wave 1, then we have a 2, 3, and then one would expect a 4 and a 5 in some sort of a leading diagonal, right? This has to be a leading diagonal, which means that in wave 1 we need to have a zigzag. Now you can force a zigzag in this wave 1. It's very steep, but you can do it. But there's a couple of reasons why I don't really like this scenario. The first one is that this wave 1, yeah, you have to force a zigzag, but it's very, very short in time. Wave 2 is also relatively short in time. Now that is no problem, that's all good. But then you have this wave 3 that is very, very long. So this wave 3 in time is much longer than this wave 1 and this wave 2. And in a leading diagonal or an ending diagonal, you want to see at least a little bit of a time relationship between the individual waves, like a 1, 2, 3, 4, and 5. And I believe this wave 3 is really, really long compared to a wave 1 and a wave 2. That's not necessarily the invalidation per se, but it's not a very nice diagonal. And then if we look at another, by the way, wave 2 did retrace to the 0.886, which is a common target in a leading diagonal, for example, for a wave 2, so that's fine. However, my biggest concern is actually the wick that we had. So if this is a wave 1 and this is the wave 2 of a leading diagonal, you can pull the trend-based fib tool from the high over here to the low of 1 to the high of wave 2. Then you toggle on these fibs over here, the 0.786, 886, and the 1-to-1. A wave 3 in a leading diagonal is not allowed to be longer than a wave 1. And if we zoom in, you can see that the wick over here past the 1-to-1, which officially, following the theory, is an invalidation, because wave 3 is now longer than wave 1. Yes, it was a wick, and one could say, but hey, the candle closed in the common target for a wave 3, because this is the common target area for wave 3 in a leading diagonal. Yes, one can say, okay, the candle in the at least 1 hour, because if we go to the 50-minute, we do have a close down here. But on the 1 hour, yeah, we did close over here. Yeah, we had a little bit of a close below, but you know, you could make up to say, okay, it's still valid. We closed here, but I don't like this. Like, I'm very theoretical, let's say. I don't like the fact that price moved beyond the 1-to-1, which makes this scenario less likely and also a little bit like invalid in my opinion. So yeah, my preferred scenario therefore is actually a WXYXZ. So in this scenario, we then have wave 5 ending over here with a expanded flat W, zigzag X. Then we have over here a 3-wave in Y, which, yeah, this has to be like then still some sort of a 5-wave, like a 5-3-5 type of structure, or is of course a 3 or a complex 1, 3, and then a 3 or 5. This one is pretty difficult to count, to be honest. But in this scenario, this is then the low of wave Y, but inside the most common target for wave Y as well. So that is all right. And then we would be looking to the upside for a wave X. And what is nice about wave X is that the Fibonacci's that you see over here, all of these, funny enough, are common targets for a wave X. So, that makes it a little bit different per se. But the 0.382 has at least a minimum target. But what I like is that we have quite a nice amount of confluence over here. We have the golden pocket, we have a high or at least a couple of highs, we have a weekly and we have a daily, all at this level, basically between 27.9K and 28.1K. So this is a nice area of resistance for then a potential short setup with the stop loss above, trading it to the downside for then a wave Z. And then again, the trade to the upside potentially is entering in this area over here, stop loss below, trading it to the upside. Now, if you would follow the official theoretical rules again, then in a WXYXZ, the wave Y has the most common target is only the 1-to-1, and as you can see, we have been ranging around the 1-to-1, which is pretty good to me, in my opinion. That looks fine, but you don't really want to see price go below the 1.236 like that. That would, like, going below this wick would kind of invalidate this scenario maybe, and the bullish or the bearish scenario with further downside to come becomes a lot more likely. But yeah, this is looking pretty good so far. And in this scenario, again, we would be looking for upside with the invalidation this wick. And this wick, guys, and girls, is very important because below this wick, there's simply not too much support anymore. I already showed you my targets. If we look also at the chart, there's not much range or support over here. If we would go below this wick, I can imagine that the next target box down here is going to be quite a likely target. And this target box is sitting between 24.85K and 24.4K basically. So yeah, I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and see you at my next video tomorrow morning at 7 a.m. Central East European time. Bye bye.